we can now go to our 15-minute time frame. You establish the power of three concept from the 15-minute time frame. It helps you see the charts more clearly by identifying the full delivery of the sessions, because when you check the 4-hour time frame, you're not really going to see that sessions, because most of that is within a candle delivery. So you can also see that in the 1 hour. You can clearly see that from the 1 hour. This is the Asia session established. So in the 15-minute time frame, we have more of the candle delivery to make things more clearer based on the power of three. You go to the higher time frame to establish your levels, your key levels, or your sponsorship zones to anticipate your entry. So once I marked that, what you would now want to identify in the 15-minute time frame is this. We've already established that price took out this buy side, dropped. The Asia session has already seek liquidity, mitigating our higher time frame point of interest. We don't necessarily need to see that price would trade higher to seek the Asia session high. So this is something I explain in the free PDF. It's in the free Telegram community. You can go check that out. And to better understand some of the concepts, you can do well to get the Smart Money Concept Trading Bible. Here's the free material that's available in the free Telegram community. You can go check that with vivid explanation to the concept. So let's get back to look at the review we are basically looking at, guys. So clearly it means that we have our point of interest established, because from the 4-hour time frame, we have our change in state of delivery here. And you can clearly see price give the single candle order block, and price have mitigated that. So you can see this is also approximately in confluence to the 50%, the mean threshold of this candle volume. So that can be a particular price level or zone for us to take our trade execution. And what you can see, we have a drop, a base, a drop. So clearly this was where I had my short entry at the level we marked, and then the stop loss above this candle wick. Why? Because you can see price created this engulfing candle, this traded, mitigated that, and fell. So it means if price is going to trade higher, it shouldn't violate this candle. So we had our stop loss above this candle wick. So basically now, when you're targeting, now what you can see, this is already Asia session low. So we can now go to the higher time frame, and basically the 4-hour, or you go to the 1-hour time frame. So from the 4-hour time frame, what you can see, we have this order block. Where's the draw on liquidity? This is a draw on liquidity. So we can target that draw on liquidity, or you could target the order block here, because you also have a fair value gap resting here. So basically my target was just this sell side liquidity, and this trade was, I think, 1 to 6. Yeah, so yeah, 1 to 6.41. So this established. Now going back to the 15-minute time frame, so what we can see from the 15-minute time frame clearly is that we have our entry and we have the drawn liquidity. Clearly from the, you can see we have what trend line liquidity resting here from the 15-minute time frame. We have what this trend line liquidity. So let's play price to see what happened on Tuesday's delivery. So this is it. So what we can see, you can see how price traded back, activated the entry, and then we had the fall, bearish to the downside. I really do not care about how this impulsive strong bearishness happened. I was just targeting the draw on liquidity, and this is already 1 to 6.41 RR. It's a profitable trade setup. So this happened sharply. I couldn't get to leverage to trade this bearish impulse, this massive bearishness that happened to the downside. So clearly this was what just happened. Price return here mitigated that, and then the bearishness to the downside. So when we go to the 4-hour time frame, what you're going to see in the 4-hour time frame is that price traded down to the downside, taking out even this sell side liquidity. So the 4-hour trend line liquidity is this. You can see the 4-hour trend line liquidity. So yeah, you could have targeted to see price seek the trend line liquidity. But when it comes to trading, as I've always stressed to some in the mentorship program, is straight from zone to zone. That is how you want to do some of these things, because you didn't design the markets. So basically we had a drawn liquidity here, and I was talking about the bullish order block could be your next target. So the 4 hour was this trend line liquidity, which when I executed the trade, I really didn't even identify this trend line liquidity. I just wanted to trade and seek the first sell side and see the possibility that price would give another reason to continue bearish to this level. But fortunately, price gave strong bearish impulse to the downside. So we can see price seek this trend line liquidity, the higher time frame, which is a 4 hour trend line liquidity. So that was just the delivery that happened on Tuesday. So let's play price to see what happens. And then price traded back into this fair value gap we identified from the daily time frame. So let's look at that from the 1 hour time frame. So you can see there wasn't really a reason to have an entry during the New York session for a bearishness to the downside. Even when we check that from the 15-minute time frame, we can clearly see that we had no reason to have that bearishness during the New York to anticipate that price will just continue. So what we can just see during New York, when price, this is the New York time, this is at 8:45 a.m. using the New York time zone, price mitigated the fair value gap and then went bullish to the upside. So clearly now that was what happened, the daily fair value gap. So in preparation for the next day was when I had this entry, but then I was stopped out of this particular trade setup. We can see that from the 15-minute time frame, we had this market structure shift. This was what I saw. So we had this market structure shift after price mitigated the daily fair value gap. So I basically just established that from the 15-minute time frame. And that was the reason why I was taken out of this trade. If I looked at the 4 hour, the zone below the Asia session within the 4 hour, I think that would have helped me not to be out of this particular position. We're going to see that, guys. So in preparation for Wednesday, we can already see the Asia session delivery. So let's play that to the 12 a.m. open price. Okay, the Asia session. Okay, now we have the 12 a.m. open price here. So, this is basically how I look at these things. Once we have that established, you want to check the 4 hour time frame. So let's check the 4 hour time frame, or you also check the 1 hour, but basically the 4 hour time frame because of the connection to the 15-minute time frame. So from the 4 hour time frame, this was what I saw. So you can see from the 4 hour time frame, we saw a market structure shift in the 15-minute time frame. But you can see that the volume of this bullishness, this bullish candle, did not trade above this bearish candle. So there is now a reason for you to anticipate the possibility that price will trade more lower to seek this previous day low before the bullish reason to the upside. And why in the 4 hour time frame within the daily bullish zone, we have a 4 hour bullish fair value gap resting here. And this delivery traded into that, but this delivery mitigated the mean threshold of the 4 hour, not the mean threshold of the daily. So there's the possibility that price will sweep this before we have bullishness. But anyway, what I now saw was, because I was in the 15-minute time frame trying to just look at our session and then have my trade execution, because I know that price have traded to the daily zone, and from the 15-minute time frame we had this market structure shift here, and then this is the Asia session. What is the block below the Asia session? We have this bullish order block and the 8:30 a.m. open price during the New York session, and that was why I had this entry here. But unfortunately, I was taken out of this trade on Wednesday. We're going to see that. So let's play price to see what happened. So we had a 12 a.m. delivery. So that was what happened. So you can clearly see price took me out, and then we had bullishness. So I explained the concept of why we should buy below the Asia session, and basically this works with when you establish the buyers you are expecting for that day, and also in confluence the weekly perspective you've built. And some of this entry concept, you're going to understand them more better in the Smart Money Concept Trading Bible. So what we can now see is price traded to this demand, which is the bullish order block. But unfortunately, I was taken out of the trade. Price dipped into this, taking out Tuesday's low points. So clearly now, this would have been the better place to take this entry, looking at the fact that when you check the 4-hour time frame as a zone to establish the entry below the Asia session, you can see there was a reason for price to trade more lower to the downside. Price could seek this. Why? Because after the mitigation, there wasn't a reason that you should anticipate strong bullishness immediately, because when this bullish candle was delivered, did not trade above this bearish candle. Let's check that in the 1 hour time frame. So in the 1 hour time frame, what you can see is we had a sweep. What is a market structure shift in the 15-minute time frame? You can see here is just a sweep, and then price traded to the downside to seek the sell side before a bullishness, because price seek buy side. So price returned to seek sell side, because also there is a zone that could sponsor that draw on liquidity, that could anticipate that draw to the downside before the bullishness, and then price traded to that downside before now we can see that bullish delivery. So once now we've established that, and where I was looking forward to see price trade into is this particular level that was violated, this level. Yes, we have this level, and then we also have this level, but then I love to trade from zone to zone. So my target was to see bullishness first to this zone, and then wait again to see what would be the narrative to anticipate more bullishness. So when we go to the 15-minute time frame, what you're now going to see, yeah, so you can see this is it. And basically now the first target would be to see price seek the Asia session high, this high here, and in extension we have this liquidity. For our, we had a fair value gap, which we can anticipate to see price trade to this level. So most times I also like to be conservative by not being so extremely expectant. So this already was a setup that was 1 to 5.94, but anyway, I was taken out of that particular trade, and that was Wednesday delivery. So let's play price to see how that was delivered. So price traded bullish to the upside, reached the targets. Also, you can see reach that other targets. So basically, we are now in the New York session. I didn't take a trade in the New York session. So let's play price to see, anticipating Thursday. So looking forward to Thursday. This is the Asia session. So let price trade to the 12 a.m. open price. So now we are in the Asia session. Let's do it with this and then look at how you would have anticipated to take your trade. So we have our 12 a.m. open price. So basically now, when you look at this, we are now what? Bullish. Because now price have traded to our discount level. Price have traded to our discount level. Now we have the push of price to the upside, and now we have the clear market structure shift to anticipate bullish movement of price to the upside. So you can see we have a market structure shift. This is a minor market structure shift. So this is now more of a long-term or possibly a major market structure shift, because we had inducement taken, price traded to the downside, liquidity sweep, push to the upside, breaking this high that seeked this high points. So let's do it with this so that we don't have a clouded chart. So let's look at how price delivered on Thursday. So for Thursday delivery, we can see the market structure shift. Now this is Asia session. So we're anticipating to buy. We want to buy below the Asia session. So 4-hour time frame. Let's go to the 4-hour time frame. Here in the 4-hour time frame, what you can clearly see is we had the push to the downside, mitigation of our zone. So we can see here that price mitigated the 4-hour, went below even the main threshold, and then into the daily, and then you can see bullish impulse. Price took out this candle high because this is a valid pullback because it swept this high point. So you can see how volume traded above that. So we can see a pullback here, price traded, swept liquidity. When you change that to the line graph, you'll see at a pullback, a drop to the downside. Now we have a reason to anticipate bullishness to the upside. So this is the delivery of the Asia session within this 4-hour candle. So since we are bullish and we are already anticipating to continue bullish, and we want to buy below the Asia session. So what we have below the Asia session is this unmitigated candle wick. So we can just mark that as a level, which is the open close price here. So we have this unmitigated candle wick. And basically in higher time frame, when you mark unmitigated candle wicks, you would want to look at lower time frames. You can find the possibility of seeing other blocks there. So, but from this 4-hour time frame, clearly, what you can see here is this fair value gap and the rejection block here, which you could anticipate to see. That should serve as where your point of interest should be before the bullish reason. But when you now incorporate the understanding of structure and then the trading sessions, then you would see that you can be able to identify POIs that relate to an anticipation that correspond to a trading session. So because now we can see, okay, let's look at this price. This is the volume of this traded movement to the downside. And we can clearly see that when price traded to the downside here, volume here failed to close below this and then bullish impulse. So this also established a reason for us to anticipate bullishness to the upside. So it means now that the closest point of interest in respect to an anticipation for the London session is this unmitigated weak. But structurally now you can see we have this fair value gap here as where you could possibly anticipate to be your POI. So let's check the 1-hour time frame. So in the 1-hour time frame, what we can clearly see is, this is a pullback, a fall, a sweep of sell side, bullish movement, market structure shift after mitigating daily point of interest. So now we have this unmitigated order block zone, demand zone, because here we have a sell movement before a bullish reason. Price have not really mitigated the volume of this, and it is now also below the Asia session low. So we could see price mitigate this level, and then we have what? Bullish reason, because this is unmitigated. So from the 4-hour, you had a fair value gap and a rejection block. So looking at structural narrative, this is where you have a bullish order block or a rejection block marking this level. But anyway, let's mark this the close price or the open price, sorry, of that candle. So this is basically a point of interest on the structural level, because here we had the sell movement that swept liquidity, bullishness to the upside, market structure shifts. But now in respect to session, we have this below this Asia session low point. And from the 4-hour time frame, you can see that it is an unmitigated weak. So price can mitigate this and just continue bullish. Are we getting it, guys? So from the 1-hour time frame I showed us, we have this bullish order block there. So let's check our 15-minute time frame. So also now looking at the 15-minute structure. So now when you drop to the 15-minute time frame, you want to look at the 15-minute structure clearly. So from the 15-minute structure, we have a pullback, bullish reason, price pullback, mitigated this bullish candle, and then we had push of price to the upside. So you can see here we have an inducement liquidity, or basically here a liquidity. So we have a liquidity resting here, and we have an unmitigated rejection block resting here. So you can see confluences to how I look at the trading sessions. And we have the 8:30 a.m. open price during the previous day New York session. So this could serve as a support level to send price to the upside. So it means now by refinement, I can mark this rejection block, which is what I did. In confluence, we have 8:30 open price. We could serve as support to send price higher. And then from that zone, I had the reason to anticipate my long. And then we had the entry was here, stop loss below the candle wick. Targets, you target first the Asia session high points and then this other high points. And then in extension, you could look to the 4-hour or the 1-hour time frame. And what you have is this fair value gap resting here. In confluence is an inversion fair value gap also here. So let's mark out the inversion fair value gap, which is in confluence to the fair value gap. So this is it. So let's get back to the 15-minute time frame. So on a long-term perspective, you'll be targeting to trade into this. But just the way you know, I really trade zones to zones, and also in respect to the lower time frame zones also. So from the lower time frame, this is a drawn liquidity, and in extension this high. So my target clearly was to see price takes out this high points. That was my target. But now, in extension, we have this on a long-term perspective. So I just wanted to show you this. So let's drop that to where my target was to see price takes out this high point as the next drawn liquidity. and this is a 1 to 5.94 trade setup. So let's play price to see what happened. So let's see how price delivered. So we can clearly see price swept the Asia session low, tagged us into the rejection block, took out also this liquidity resting here, and now we can see the bullishness to the upside. So let's see. So price got to the target. I wanted to see price take out this high points. So that was the trade on Thursday. So I didn't trade today being Friday. So I just wanted to show you guys how this played out.